Hey, welcome back to Everyday Economics. This is the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, CEO of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics is a production of America's Talking Network, and you can check out all of our podcasts at americastalking.com. To support Everyday Economics, please make a tax-deductible charitable contribution by clicking the link in the show description. We're recording today's episode on Wednesday, November 27th, and joining me as always, my friend and colleague, Dr. Orphe Divounguy, PhD economist. Dr. O, let's hop right into it. New monthly residential sales data came out for October 2024, and they were not great. You had said that I believe, as we were talking pre-show, that you would say that is a plummeting of the number.
Oh, yeah.
Why don't you add some context to that?
Oh, yeah. I mean, down 17% for the month. I mean, that's a big drop, right? Down 9.4% year over year. So we get this big headline number that shows basically new home sales plummeted in October. And I got a bunch of text messages and phone calls from people saying, oh my gosh, the housing market, what's going on?
Right.
People are not buying homes anymore. And my answer was, well, actually, guys, if you look deeper and you look into the report, you'll learn very quickly that the only reason new home sales fell is because they fell in the South, in the region that was affected by the hurricanes. 28% drop in the South. Basically, the first drop in a long time. I mean, the South has been building the most housing in the United States, and builders have been able to sell homes in the South more than any other region. And so the dip in the South is what led the report to what dropped the number in the overall report and made it look like new home sales had basically plummeted. Right? Yeah. It's temporary. It's the effect of the hurricane. Right? Again, climate risk does play a role sometimes. Sometimes it just delays purchases. What could potentially be happening is that potential home buyers affected by the hurricanes, builders themselves affected by the hurricanes, had to put things on pause, had to put things on ice just to get through this tough season and get back to business when after the cleanup.
Yeah. So I mean, so you're chalking this up to basically, weather related.
It's all October hurricanes. Some people might say, well, you know what? Mortgage rates have been rising. And so maybe the mortgage rate situation is affecting new home sales. And to that, I say it's affected existing home sales. New home sales have been on a rise, regardless of what mortgage rates was happening.
In the markets that I'm monitoring, and just trying to pay attention to kind of an array of mid-size and metro markets. I'm seeing things that would represent, what amounts to be a cooling from the FOMO of 2021 and 2022. Houses that are coming onto the market in those neighborhoods, priced at the numbers that their neighbors got during that massive surge when interest rates were low, and demand was high because supply was low.
Yeah.
Seeing price reductions in places like, for example, like Pittsburgh and Allegheny County, and even like Washington County and Greater Pittsburgh, and also in a hot market like Durham, and the Triangle area, around Raleigh and Durham. But also, there's been somewhat of a cooling in one of the hottest markets in the country, in Nashville. Yeah. And I find that to be somewhat surprising, because Nashville looked like it was just going to keep going and going and going.
And I think when people talk about cooling, they really need to separate supply from demand, right?
Yeah.
It's not necessarily a big drop in supply. In fact, homes are still selling faster than they were before the pandemic. It's a big increase, demand, not a big drop in demand. It's a big increase in supply. These markets are markets that build fast. And so the increase in supply has basically helped to loosen the housing market somewhat and make room for newcomers, which is exactly why more newcomers are still coming to these areas, right? So I love those markets. I call them healthier. They're healthy markets. the last thing you want is the Californication of the U.S. housing market. The last thing you want
Right.
is to see California everywhere across the
Right.
country, right? It's super expensive. The down payment required, the down payment the median household would need in order to keep their monthly cost affordable in the LA market, right?
Right.
By affordable, I mean, if you wanted your monthly payment to be 30% of your income, right? And you were the median income family in California, in Los Angeles, you would
Right.
need a $780,000 down payment. That's absurd, right? The last thing we want is to end up like Los Angeles. We need to build housing, and those markets, Nashville, Raleigh, all those markets that building housing, it's amazing. It's like builders are really stepping up to the plate. They're building, you look at a builder like Taylor Morrison. They're building affordable. They're building at a price point that people can afford, which is why new home sales have continued to increase. Right?
Right.
They're also providing rate buy downs, ways to get around the affordability challenges that people are facing. They're meeting buyers where they're at.
Yeah.
And I think it's a beautiful story. So the dip in new home sales, no big deal. I think new home sales are going to continue to increase. This is kind of the slow time of year anyway. But
Yes.
basically, you're likely to see the big uptick in the spring. Things will resume as normal, especially now that the U.S. economy is doing pretty well. The incomes are rising in real terms,
Right.
right? Real incomes are rising. Mortgage rates are still lower than they were a year ago. Wealth, I mean, the stock market always touching new highs almost every time I look at it, right? That's more wealth, more financial wealth for families. I said this last week, if you had invested and remained in 2019 and remained invested, you would have almost doubled, 81% up, right? Something like the SPY, right? You would have
Mm-hmm.
nearly doubled your investment in just 4 years. I mean, it's just amazing, right? That we get to live in this time period in the greatest country in the world.
I appreciate your thoughts as always, Dr. Orphe Divounguy. This has been Chris Krug. Subscribe to Everyday Economics at americastalking.com.